But basically, the premise of it is to basically say the assets you own or believe to be owned do not determine where you are financially. That was one of the key lessons I learned, which was you could have a giant mansion, but you might not even be able to afford it. And you could have a lot less money than someone who lives in a small little cabin because they're putting money away. So the assets that you have don't equate to how far you are financially.
And so it's kind of like the millionaire next door concept is you could have millionaires next door that you don't think they're millionaires because they don't have a
It's
big
invisible.
house, but
Yeah.
that could actually be the exact reason they're millionaires is because they're not spending on these lavish assets.
That's exactly right. Yeah, because they decided not to spend lavishly, to hold back. And that's what gets people to be millionaires. So you don't become a millionaire by purchasing ridiculously expensive stuff, eating out all the time. You become a millionaire by learning healthy financial habits.
How do you think that translates to what we're seeing in the markets now? Because you could argue that that's what's really driving all the frenzy lately is that everybody's trying to get rich quick.
Yeah, everybody is trying to get rich quick. I think it's one of those things why a lot of people are quitting their jobs. They're like, hey, I see NFTs, I see Bitcoin, I see all of these things that I feel like I could make more money than my job. I think that's one of the reasons why people are quitting their jobs, because they see more opportunities. And there are more opportunities now than there ever were before with the internet and these things. And I think we'll continue to see that long term, where people will have an easier reason to leave a job because of the amount of opportunities that there are outside of the workplace. And then we're seeing people like financial influencers and whatnot making six figures a year just by building their own thing and doing what they want to do instead of working for somebody else. So yeah, you could do that as a side hustle too.
All right. So let's say that we're new to investing. Where do I start?
So you first want to make sure you have a solid foundation before you start playing with your money and putting it at risk, and only risk what you're willing to lose. But one of the most important things I've been able to control is FOMO. It can be difficult to see other investors making hundreds, if not thousands of % increases on their trades, but you have to make sure to do your own due diligence. So the key thing to remember when you first start is to begin with an index fund, like maybe VOO or SPY. And when you feel comfortable, then you can begin researching other companies and looking into investing them and analyzing them, doing fundamental analysis on them. Especially now, it's important for new investors to recognize we're in a bubble. At least I think now understanding some basic economics helps here too. For example, the government can't keep pumping trillions of dollars into the economy and not expect a consequence. Elon Musk was talking about it the other day on the Wall Street Journal. And what the government hasn't been very good at, and it's very clear, is asset allocation. If it were up to me, I'd have some of the world's most successful CEOs who have been able to asset allocate be advisors for the Fed. Now, what happens with the government is if there isn't enough money, they'll just print some more, causing inflation, which is fine. You want continued inflation, but a really high percentage at 6.2% might not be that great, especially if it's the highest in 30 plus years. So because of this economic situation, we're going to see a volatile market. It's important to understand that with stocks, NFTs, crypto. It's important to invest and only risk what you're willing to lose. And if you're looking into long-term investing, just stick with it, keep analyzing the company, and trust your gut, but also do the due diligence and keep yourself educated.
Yeah, I'd like to talk about the FOMO idea a little bit. I think that's something that is maybe not discussed a lot, but it is certainly real right now because you cannot go on social media in any way, shape, or form, whether it's Twitter, Facebook, TikTok, Snapchat, any of those. You're going to see somebody out there talking about how great their portfolio is doing. And then you look at yours and yours is like, bleh. And it's really hard not to buy into that enthusiasm, hype, whatever term you want to. So how do you fight against that?
I don't know if I necessarily fight against it. I generally have my own opinions on what stocks to buy. And if someone posts something saying this is really important to buy, you should look into investing in this, I'll look into it. But it doesn't mean I'll place a trade or invest into it just based off of what someone posts on social media. I mean, you can see with Elon Musk, he'll post. He could write Doge right now on Twitter and the crypto would pump insanely just because he put that one little tweet. And then you see some stuff on TikTok too. Like you have these people showing their portfolios or how to get rich quick through this type of trading strategy. And it's just stuff that you just want to do the research on your own, because if it doesn't do well on, you're going to blame the person who taught you on TikTok. But at least as if you know you did your research, then there was nothing else you could do. But it's always important to not fall into what I like to say is take most of your emotions out of investing. Just keep with the facts and with the research and what you know.